Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Thursday afternoon edition, getting ever so close to the Friday weekend. Love it. Hopefully, I'll go have some fun this weekend and get in a great mood and get ready for great shows next week and get back on this horse. Today's show is driven by a viewer question, and not that it's necessarily a very specific question. It's just one that I think is worth answering because of what's happening next week. Of course, that is the trade deadline approaching. Now, a lot of countries are already scrambling to settle. There's been a lot of deals inked. Of course, we had Japan settling at 15%. And it does seem like right now that 15% mark is the threshold that it looks like more and more countries will settle with. So the question came in from Les. Les, thank you very much. There was no smiling during this one, but I did no snickers either. It says, with the trade agreements that have been announced, other than Europe, how significant a day can it be for trading? Well, we still have, it's not just Europe, right? We have, I have to remember the numbers off the top of my head because they seem like they change like a popcorn machine all the time with President Trump. I think Mexico right now is at 30, Canada's at 35, China's at 55, yet those aren't inked deals. Those are just numbers that we're saying, well, we're going to stick this to you. I think the good news for us as traders is the sensational numbers of, 155 tariff on China or whatever the heck that went up to, those probably won't come back. So I think the extremes of that pendulum swinging have now been kind of whittled down, and we're going to end up with a number that's much more manageable. So to Les's point here, he says, well, how significant of a day could it be? It could certainly be significant if Trump does the shock and awe that he likes to do, which is, okay, Canada, you guys haven't agreed to anything. We're going to slap up 100% on you just to force them into more trade deals. Now, I don't think that will happen. I think that we'll probably get somewhere in the 20% range for Canada and Mexico, and China will be the biggest looming one there. But that day could get a lot of, intraday market volatility. And just for me, from a trading perspective, I hope to not be trading that day. I will most likely be in positions. I'm going to be scaled down this next week just because I don't want to have too much exposure to volatility. And if things do happen with shock and awe, which can always happen, as we know, I'd like to have some dry powder so I might be able to buy this market just a little bit lower. So all in all, I'm actually still optimistic even for the market overall. I just do expect there to be some hiccups on this day. And I think that August 1st, which is rapidly approaching, we're going to 7 days away. That'll be next Friday. I think that August 1st will probably be a down day. I think that it's going to be just some negative issues and some posturing between whether it's Canada, Mexico, even Europe. Europe hasn't been finalized either, but it looks like they're getting pushed more towards this 15 to 20% level. So that's how I would approach this one. That trade deadline looming, I don't think it's gonna be like a 3 or 4 or 5% day in the equity markets. But could I see it down like 1.5%, maybe 2 to an extreme? Yeah. But again, I have no clue what's gonna happen, right? I can just sit there and try to trade it, but because of the uncertainty and any comment that's posted on Truth Social or X, it just leads me to believe that I should probably step away from it and not get too involved with it. I just certainly don't want to put more exposure on myself. That said, for some of you, if you want to take that risk, you're probably going to have some decent intraday swings here as either the hardline, axe falls and we're going to hit them with huge tariffs because they haven't done a deal, or maybe we get some agreements and all of a sudden everyone comes to the table and we get an equity market that has a big surge. I mean, look what happened in our markets today. A nice update for the equity markets, a relatively small range. You can see here on the S&P, it was 0.16% up for the S&P. My expectation was that we're going to see a little bit more of a breakout here, and then as we got closer to the August 1st deadline, which is that blue vertical line on your screen, that might be a little bit of a sell-off. And again, we're still on a great uptrend. I'm still bullish. All my positions are long. I'm not shorting anything. I was shorting Circle, but those are all done now, and I will leave Circle alone. That one bit me enough, so I will just leave Circle alone. Don't want to mess with that. Sava says, is the Japan deal official? I thought I saw something from Japan saying that deals weren't defined yet. Not 100% sure on that. I know that from everything I read, like the deal was done from automotive. There may be some other areas of the economy or market that may get some tariffs, but I don't know if it's been officially signed, sat down and agreed, and lock, stock, we're done. Not like some of the other countries where they officially sat down and locked them all in. So I don't think it's going to be as as perilous as I did on July 9th. Remember, July 9th, I was really expecting big moves because there were still a lot of parties that hadn't come to the table. But he gave them an extra little reprieve, and here we are now, approaching August 1st rather quickly, and more countries are coming to the table to sign some agreement with regards to trade tariffs. So I think all in all, it's going to work out fine. Going to work out fine. Tanya, thank you so much. Aw, most of the time I have to hear recordings of your show due to mommy duties. Just come today to tell you you're awesome and that we love you. Oh, thank you so much. I really appreciate that. And again, thank you guys so much for the support. It means the world to me. It's been great. I don't see Big Eb today, but Big Eb, I'll email you back. Let's shoot for Sunday. That sounds like a good idea. Lisa says, I asked AI about the Japan deal, and Japan actually announced the deal. There is a deal. I don't know the details. Funny. Well, I'll dig into it a little bit more maybe for tomorrow's show. So that was your first piece. I'll get to the Tesla trade here in just a minute, Luis. Let's go to an interesting earnings announcement. So we can go to Intel here, the O-I-N-T to the C. Now, Intel used to be one of the most significant players because it was listed on the Dow, the S&P, and the NASDAQ. Now it's such a small piece of them, it doesn't really have that big of an impact when it has bad earnings. But Intel. So you see on the screen here I have layoffs. Intel had a pretty bad earnings announcement today. Their revenue was fine, but their earnings per share, they missed by quite a large margin. They were expecting 10 cents and, they were expecting to make a penny and they lost 10 cents. There's your numbers there. So earnings per share, a loss of 10 cents versus expectations of making 1 cent. Their revenue, though, actually did tick up to $12.86 billion versus $11.92. So great revenue. Poor on the earnings. Now, they also lowered their expectations and forecasts, and I think the real big piece here was their layoffs. So Intel said they're going to lay off by the end of this year roughly 25% of their workforce. They're at 99,500 right now, and it looks like they're going to, expectations are, get down to 75,000 employees by the end of the year. So you're getting rid of almost 24,500 employees. That's a pretty big chunk. Now, from a technical perspective, you do see this chart looking, oops, I didn't mean to put moving averages on there. I meant to take volume off. You've got this nice uptrend since April. Certainly nothing like the broader equity markets. Those are, obviously the tech stuff looking much better. But it is positive and reassuring to see Intel slowly creeping up like this. Now, today's price action down 3.66%. Layoffs are generally a good thing. You're cutting out a lot of cost. And, Intel employees probably aren't making $30,000, $40,000. They're probably in the six-figure salary. So I would imagine down the road, this will start to be a much better thing for Intel going forward and maybe help their profits, their earnings, because you're taking out a lot of the employee expenses. And I don't know to what extent some of this stuff might be being replaced by robotics or AI, but I would be interested to see how that will pan out here going forward. So that was your second piece of information that I thought was somewhat interesting, was Intel. The third piece, this one kind of pains me because I have some puts on this bad boy right now. I don't have puts. I've sold puts on this bad boy, so I'm expecting it to slow down, bottom out, and potentially even move on up. I'm talking about UnitedHealth. So UnitedHealth is already underneath one big major federal investigation, and now there's another federal Department of Justice, I believe, opened an investigation into them about their practices of billing. Not good. UNH has been looking decent, actually, for the past 3 weeks. It hasn't, but it was drifting up here. Let me take this line off the screen. You can see for a while it was just kind of going sideways to a slow drift up, and now all of a sudden we have a pretty decent down move. I do have the 275 puts expiring tomorrow. I'm not sure if I want to close those out beforehand or not. Given the fact you've got two federal investigations, I think that there's a good chance that this is probably going to continue down. Now you're like, well, how far down can it go? Well, look, it's already gone from over 600 down to 275 roughly. And, where do we end up? Could it drop down below 200? It absolutely could. And I certainly don't want to be having a big position in this if it decides to go into free fall. So I'll have to make that choice tomorrow whether I want to close this bad boy out, buy back my puts, or just let them expire. It'll probably come right down to the wire unless we get a big gap down tomorrow. Then I'll probably just have to bite the bullet. But that step down move is hard to overcome, absolutely, and it's been stair-stepping multiple times. Part of this, I liked it because it felt like it was stabilizing. So right around that 300 mark, I was actually fairly okay with UnitedHealth. It just felt like that might be the long-term kind of stabilization point and not having too much issue staying there. Now, over the past, you can see here, the past 2.5 weeks, we've gone from 326, and now we're down at 278 again. So it's almost a $50 drop in the price of UNH. Not good. Not good if you're long, but we'll see what happens out there tomorrow. Are they too big to fail? Technician, that's my opinion. My opinion is that they are too big to fail. If they have some accounting irregularity, maybe they'll pay a fine. Maybe they'll do a little bit of a fine, not that big of a deal. Who knows? They're paying $24 per share earnings. I mean, that's phenomenal. They have significant numbers. Their revenue, let's see if I can bring up some numbers here for you. They've got, these are all numbers I'm not really familiar with, but here's your revenue growth, and you can see revenue has been slowly trending up quarter after quarter after quarter. That may actually start to slip here, but it looks like they're making about $111 billion a quarter. Not too shabby. You look at their earnings, the last number here, which is their expectation for July 29th, which will be next week, is their earnings announcement. That'll be an interesting number. Expectations are very low, and this is a good thing for anyone who's long on UnitedHealth, right? Because if you look at what typically happens, you lower the obstacle, which is your earnings target. The previous number, they were estimated to make $7.29. Now they dropped that estimate to $4.52. That's probably a very easy hurdle to get over if you are UnitedHealth. Previously, if you go back to Q2 of 2024, it was 665. Next quarter, 701. Next quarter, 674, and so on. So this is a pretty significant drop in the estimates on their earnings. If they beat those numbers, you could see a really nice move up. Although that looming federal investigations, both of them, could certainly cost them some money down the road. But it'll just probably be in the form of a fine. I can't see it being that much more. What else we got here? That was good. Let's see. Lisa's Coin keeps messing with my $400 strike short puts. Well, Coin, crypto's been just kind of a mess lately anyway. I haven't really felt like there's been any great direction. You've got that $400 strike, so you're just bouncing above and below it, and you've got calls on that, right? Those are call options. Short puts. Okay, so you sold puts at 400. Pretty aggressive. I mean, buying after selling puts after such a huge rally. I'm sure the premium was pretty expensive on that bad boy. Ultimately, I think it comes down to what does crypto do, and we've focused on this chart a bit over the past few weeks, which is right now, Bitcoin's just going sideways, and there's this phenomenon that's altcoin season versus Bitcoin season. Bitcoin is the king of kings, right? That's the main one. Everything else other than Bitcoin, including all the meme coins, all the garbage, all of those are altcoins. Now, if we look at Bitcoin's dominance, there's a really cool chart. It's just type in BTC.D on TradingView, and you can see Bitcoin's dominance. And I mentioned the other day that I thought money would flow out of Bitcoin and go into altcoins, and look what's happened. You can see the dominance of Bitcoin went from roughly 66%, fell all the way down to 60. And that means all that money's flowing out of Bitcoin into altcoins. And that's typical, having it like an altcoin season. The question is this going to continue? Will more money pour into Bitcoin? And I think what's really interesting in that regard is it depends on the regulatory environment. Hey, Big Ab, good to see you. I got your email. I'll respond back to you. Sounds good to me. So, this isn't one that I would be using supply and demand zones on. Yeah, essentially this is money flow, Margaret. It's money flow saying it's either going into Bitcoin or all other cryptos. So if you follow people on social media, altcoin season, everyone's always talking about altcoin season. That typically happens after you get a big surge in Bitcoin. So Bitcoin takes this lead charge and pushes the market really high, and money flows into Bitcoin, causing that surge. And then after a certain point, people sell that Bitcoin, buy a whole bunch of the alternative ones like Ethereum, Cardano, Pepe Coin, whatever it is, and those ones end up going up significantly. We've seen some pretty big moves there, especially in things like XRP. Let me see if I can bring up here. You look at Ethereum. Like Ethereum was, a lot of people were chalking it up as dead, and Ethereum's had a huge rally over the past month. Love it. Obviously, my second largest position. But you look at things like Ripple, XRP. Everyone's boasting about XRP. That also has had a pretty significant run here, although the big drop here a couple days ago. But Ripple and most of these altcoins looking pretty good. Tron is another interesting one. I like Tron because it's been the most kind of clear, defined trend. It's a cheap little coin. This is basically a knockoff of Ethereum. Many years ago, they took Ethereum's white paper, did a search and replace for anything that said Ethereum, and replaced it with Tron and launched it as their own. Kind of I don't know, slimy, but run by a guy named Justin Sun, who's the dude. I think he spent $6 million for a banana taped to a wall with duct tape. You guys saw that? Crazy people. I don't get what's going on. What I'm really more interested in is this. This is the chart of the total market cap of all crypto. This really tells you where the money's going, right? You know, Margaret was saying about money flow. That BTC.D chart will show you where money's going relative to Bitcoin. This is all crypto. And to look at the low we established here in 2020, late 2022, November of 2022, to where we peaked out at just a couple of days ago, we've seen $3.21 trillion come into crypto, the entire industry. If that's not a sign of adoption and acceptance, I don't know what is. You could go back to these other 4-year cycles and notice we have a similar picture. Massive money flowing into crypto right before the big crashes, and here we are now, getting an accelerated move. We might have $4, $5, $6 trillion in the next few months pour into crypto because of all the regulatory easing going on the part of our elected officials. So this is looking better and better. Going back to Bitcoin, for example, we've talked this one. Again, we're just sideways. I don't see anything here that's really that interesting on Bitcoin at the present moment. Who is the biggest buyer, government or institutions or individuals? I would say right now it is institutions. Institutions. So what you're getting is like BlackRock, the BlackRock ETFs. You're getting Michael Saylor's. You're getting the 21 coins. All these Bitcoin treasuries, if you will, are gobbling it up. And I'm seeing most of these companies U.S. based. I'm really curious to see what happens once we start to get international. All right, what happens if the European markets enlist more, Bitcoin treasuries? Because we got them in the U.S. What happened? Why shouldn't there be some over in Europe or in the U.K. or in Japan, right? On those exchanges where you have a treasury that just accumulates Bitcoin. And I think the governments will be the one. Right now, I don't think the governments are in as much, but I think that they may start to over the next year or two. The first catalyst is the Genius Act, as I mentioned many, many, many times. The Genius Act is opening the door to mass adoption. Yes, it's stable coins, but that's mass adoption. I guess I mentioned this before. Chase, Wells Fargo, Bank of America are all going to issue stable coins. You will now have the option to be in stable coins, and that once you do that, you're already in the digital world. You can click a button and send that to any other place and buy Bitcoin, whatever you want. So it opens the door to much more consumer demand. So now you have commercial with the businesses buying for treasuries, maybe even putting on their balance sheet, like Elon Musk did with Tesla. You also have the governments, and then the retailers are going to start to become more into it. So I think that that's just kind of a perfect storm for more upside movement in Bitcoin. And of course, that won't just impact Bitcoin, but we can go back to the total market cap here. That will probably have a big impact on the total market cap of cryptocurrencies over the next few years. All right. Okay. What do I have here? Who's the big one? Would love to be a fly on the desk at BlackRock. Yeah, who wouldn't? It'd be crazy to just be moving that much money around with BlackRock. Nuts. Laurie says, Don said he would short Bitcoin futures and keep his coins instead of selling them. Your opinion? I think that's okay. If you're going to hedge it, basically all you're doing is hedging, right? So if he wants to keep his Bitcoin and he's worried it's going to sell off, he'll buy puts. He'll sell futures. Yeah, you could certainly do that. It's just one way to hedge your position. So not that big of a deal. You could do that if you thought it was going to sell off. And that's not a bad idea that maybe I could be doing as well in my portfolio. That way maybe I don't have to pay capital gains on all the Bitcoin stuff. Maybe I'll wait another couple years for that. Part of me wants to sell my Bitcoin because what I want to do is I want to sell all my crypto, settle it, and then once it bottoms out again, ideally in November of 2026, I'll come back in, buy all of that back, and have a lot more crypto to hold. So it's kind of like I'm taking a $100 bill and keeping that and gambling with that and working with that only, as opposed to playing two separate pools. So, but yes, you could certainly sell Bitcoin futures as a hedge if you believe that it was going to sell, that the market's going to tank and you didn't want to get out of your Bitcoin. Absolutely. Okay. What else do I see there? Perfect. George. I don't see George here today. Are you here, George? George asked me about fintech lenders, which I don't know a lot about. Obviously, money makes the world go round. And as we see the prospects for interest rates getting lower and lower and lower, oh, there you are. I think that it invites in more economic growth, which obviously would be great for all of us here. So George asked this question. He says, I'd be interested in a look at fintech lenders like Upstart, Affirm and Sezzle. I don't know them all, but with interest rates coming down, these might do well going forward. Upstart has been active lately, worth a look. So let's bring up Upstart, see what we got there. And my challenge with this, and I think this is the challenge for all markets right now, is we're on such a phenomenal run in asset price appreciation. So for me, that's a little concerning. I'm not going to jump on the train here. I'm not going to try to buy some of these things right now. I just think that's just a little too sketchy to jump on it at these types of highs. Actually, right now, Upstart has what's called a bearish Harami formation, which is technically a bearish reversal pattern. I would be inclined to think that Upstart's going to sell off tomorrow, but that's just based off the price chart we see there. So to your point about if rates are going down, that it would benefit Upstart. Would it? Typically, as rates go up, there's more margin for these companies. As you lower rates, there's less meat on the bone for them to make profit. So it may actually hurt these companies if rates fall, because if they're lenders, right? Because I have to take money and I have to lend it out and earn yield. Well, if all the rates are coming down, then these companies may actually go get money elsewhere at a cheaper rate. So now I have to be much more competitive. The higher rates go, the more I can fudge my numbers and squeeze the customer, if you will, with my loans. So I would think that a declining rate environment would actually be detrimental to a fintech lending company. Now, there's two sides to this, right? Number one is if the rates decline, that should technically hurt their profit margins. However, if rates decline, that typically means broader economic growth, which means more lending and price appreciation. So there might be more opportunities for them to lend. So they may do more loans, have less profit margin per loan. So I'm kind of torn. It's a tough one, George. It's a tough one. What else do I had on here? Let's go with Sezzle. Here's another one that's had that phenomenal run up, and it always makes me really nervous. Other people may go for this type of stuff, but I'm not inclined typically to trade something that's gone from $25 up to $190 in a period of 3 months. That's usually just, I leave that type of stuff alone, because I'm a believer that what goes up like this can come down just as quickly, and you have this big unfilled gap going all the way back into May 7th of this year. So that makes me just a wee little nervous there for Sezzle. AFRM. Here's your other one. Now, AFRM I like. Yes, it's up over 100% since those lows in April, but the trend is nice. Higher highs, higher lows. Right now, to be honest, the last 2 weeks feels like it's getting a little bit weaker. The momentum just doesn't seem to be there. And again, George, I'm more of a technical person, so I like looking for technical trades. And if I see this thing break through the highs it established just a couple weeks ago, there's really two. You could use that 71.18 mark, or this one that goes back to July 8th, which is 73.11. Either one of those would be addition points. And I know this really depends on your style. Most people, you want to buy the dips, but the fact that it's not making a brand new high as of Monday, makes me a little wary on it, just because it's starting to slow down, show a little bit of weakness. So, it may actually end up getting weaker and become a short opportunity if we drop below $62. So right now it feels somewhat range bound, even though the range is large between 62 and 73. Maybe go for some spreads there and capture that premium. Great question. What else did I have? Was that it? You guys feel free to type in questions here. As you guys know, for some reason my show, not for some reason, but just because of my mindset and where I'm at, my shows have been much shorter than normal, unfortunately. Sorry about that. But that's just the way it is for now. We'll see if we can get back on track with longer shows. And part of it is you guys aren't sending me a lot of questions. A lot of times I get a ton of questions sent in, and I usually make that extend shows. So let's talk about just the trade that was made today. These are the current positions I have open. Most of them are expiring tomorrow. And again, I'm just trading very lightly right now. I'm not feeling very active with my trades. And again, yesterday I talked about, when you're in an emotional state, not 100%, probably shouldn't be trading anyway. I did sell Tesla puts today, and this is probably a really big gamble on my part. So I sold the 290s today. Let me put the line right here just so we can have it for future reference. I sold the ones expiring next Friday. Normally I would have tried to go for tomorrow, but I really liked where it lined up. You guys can see the line right there. It's right at this low point that goes back to July 7th. Elon Musk coming out. Oh, there's the chart here. Elon Musk coming out and basically saying, hey, we're going to have another rough couple of quarters here. Makes me a little bit nervous because, if you have a rough couple of quarters with car sales, that could continue to push this lower and lower and lower. So I did sell a few puts at 290, expiring next Friday. We were joking on yesterday's show. I think Big Eb said, I'm not going to get my 260. You might. You might actually get your 260. I think, if anything, it'll probably take a little bit to get there if it does drift lower. But either way, I'm okay with it. I'll build a bigger position and sell covered calls against my position. The comment from Elon Musk also revolved around the auto or robotaxi. And he's like, once that gets going, then we'll be totally fine. And I agree with that. I think that's going to certainly be a catalyst for them going forward. I think that the Optimus robot is going to, by mid next year, I have the feeling we're going to get these announcements that you can now buy an Optimus robot and have it programmed to do whatever you want. And I will be in line for one of those bad boys. Yes, I will. All right, let's see what else do I have. So that was the 290 strike expiring August 1st. That collects me $3.54 worth of premium. So a little over 1%, probably about 1.2%, 1.1 or 1.2% for the week. So not too bad. I'll take a 1% week any day. And then I still have the MicroStrategy. Let me just look at the MicroStrategy chart here, see if there's any chance I might get filled. I haven't really looked much today. So MicroStrategy is sitting right now at 413. I have the 410 strike, so there is definitely a good chance that I get filled tomorrow. We shall wait and see. It's down in the after hours. I have Micron Technologies as well. Good move. Right now at 111.82, and I have the 107, so I'm probably safe on that one. And then I already showed you my UNH, which is the 275 strike. And that could get hit tomorrow too. So it's going to be a very, 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 very close day on several of my positions. MicroStrategy, UnitedHealth, and then Tesla. We'll see what happens there. Okay. Where do you think the dollar goes to? Lower. We talked that dollar index. It's been a focal point of my discussions, which is the trend is your friend to the bend at the end. Until we break this line at 99.42, I think we're going lower. And how much lower? I don't know. I could bring on the weekly here. I forget exactly why. I did some analysis here and have this little lower zone, which is right around 90. I'll round it up and say 94 or 93.50. That was that kind of next target, but I think it'll take a while to get there. Obviously, that's a bit lower. But we broke that key level at 99.41, and now just drifting lower and lower and lower. That trend just keeps pushing down. So, where specifically, I don't know. As long as we keep making lower highs, this is the weekly time frame. As long as we keep making lower weekly highs, I'll even go back to the daily here. That trend is your friend until the bend at the end. So I'm anticipating it dropping back down to this low from July 1st. That low price being 96.37. Once we break that, then we'll go back and establish those levels. But yeah, that's it. All right, I see different symbols being talked to. BBAI. BBAI. BigBear.ai. Oh boy. I don't know anything about this, technician JD. I don't know anything about it, but you notice this is what happened. I always make this reference to the .com era where you had companies that were doing something and then they just added AI onto it and trying to capitalize on that. So let me see if I can go here to, let's go to, I think it's the financials. Big Bear Holding engages data-driven decision dominance and advanced analytics to provide customers with a competitive advantage in a world driven by data. Okay, you're a data analytics company. All right, fine. I thought maybe it was just Big Bear Mountain. From a technical perspective, I'm going all the way back. This was a SPAC, so this is a specialty purpose acquisition company, which I am not a fan of specialty purpose acquisition companies. We can tell because it starts off at $10 like all SPACs do. And been a roller coaster ride ever since. It doesn't look like it's split, which is a good thing. Just too volatile for me. I just don't like that type of stuff. I'm striving for consistency, not wild hits. I had the 750. So you had the 750 sold for 27 cents. Wow. You have the 750 sold for 27 cents. Okay, so you made 0.3%. Not bad, but I just think that it's too risky. That type of volatility is just too much. I'd rather go with a more established name because I'm going to go out on a limb here and say that the open interest on BigBear.ai options is extremely bad. So yeah, I'm not a fan. This would definitely not be for me. But hey, if it's working for you, you got to be careful because when you have something goes from $4 to $8 in less than a month, it's driven by illiquidity. What's the typical volume on this bad boy? Oh, wow. Actually, the volume is monstrous on this. That's way bigger than I expected. 70 million shares? It seems something seems totally weird about that. But, I guess you got plenty of liquidity. Typically, there's not on, penny stocks like that. What else? You had CRWV. CoreWeave. All right. What do we say? The trend is your friend to the bend at the end, right? CoreWeave was phenomenal. One of the darling stocks during the month of May and June, and now in July we're seeing this beautiful downtrend. It's almost like it's stuck on a perfect line. I mean, this almost feels like it's just an AI-driven sell-off because look how perfect that downtrend is. So that's what I'd be doing. I'd draw that downtrend line. I'd short it anytime it touches it. It just looks like it's going to creep back down, make lower lows. And this does nothing to do with the business. It doesn't matter what my feelings are about the business. It's just that trend. That trend looks pretty bad. Looks like it's going to keep on going lower and lower and lower. There you go. Looks like Head and Shoulders. Yeah, kind of not really a clear Head and Shoulders there, though. It's kind of like meh. Toby says, Calm is another one I found today that I was surprised with. Calm, huh? CommScope Holding Company. Is this another SPAC? No. Well, at least it doesn't look like it is. From a technical perspective, it actually looks pretty good, right? You're making higher highs, higher lows. You did have this little blip down here in April where it dropped below, but so did the whole market. But now you're making higher highs, higher lows. Looks pretty decent. Price-wise, I woun't be able to trade this one because of the price. I don't trade things under $10. 15 actually is my number, but not a big fan because of the price. And then volume is actually decent. It's got 2 to 4 million traded every day. Yeah, it's decent. As long as it's over 1.5 million per day, I'd be okay. But it's the price that's just making me go, nah, I'd move away from it. But again, we all do things slightly differently. The trend on that one actually looks pretty darn good. Les says, with today's job numbers, the labor force looks good. No need for the Fed to do anything to help jobs. Agreed. We can go back to, I don't know if I have Forex Factory on here. I'll bring it up real quick. And we'll go look at our unemployment claims today. We're expecting 221,000 was the previous number. They expected 227. We came out at 217. So good, right? No increase in unemployment pressure. Just feels rather good there. And looks fine. I think that this takes pressure off of Powell to lower rates. And if we look at the forecast for it, let's go look at our Fed funds futures. And right now, 97.4% chance that rates are going to stay right where they are at. September's meeting, we've increased. We're at 60% now that we're going to get a 25 basis point cut in September, and I would agree with that. I have this feeling we're going to get Jerome Powell pushed out by September, whether he resigns or they find something trivial to fire him on. Oh yeah, Sol, thanks for bringing that one up. I forgot. I looked at this today, and I didn't. Let's go CMG. Chipotle fell aggressively, obviously down 13% today, and came right into these lows we saw back in April of this year. I did not have a chance to bring this one up, but I like Chipotle. I'm a big fan. I may look at this one tomorrow if it stays down here as a potential sell some puts on it, because I do like Chipotle. I'd be fine owning them long term. They're always busy. They're always packed. And I love the food. And you know it's right where we're at. There's actually another level right below it, right around $44, which would probably be the strike price that I'm getting to. Not looking great on the longer term. Does feel like there's a downtrend in place here with these lower lows and lower highs. But at what point does this become a screaming buy? Where's the value play on this one? Maybe not $67, but what about 44? What about $36? 35? Margaret, I'd be a buyer at $36. Yeah, without a doubt, 36. But I don't know. I don't know if we'll get there. Chipotle's just their business model's too good, man. It's just packed. I noticed they're skimping on their portions. They're scaling back their food on me. Dang 'em. All right, let me go into your economic calendar, and we will wrap up for today. Where's my? I had it up here. Let's go back to your Forex Factory. There we go. So for tomorrow, what do we got on the plate? Well, there's good stuff tomorrow. There you go. You have durable goods orders. That's pretty much it. Now, I say good stuff because this could create a big move. If you look here, 16.4% was the previous number for durable goods orders, and that was due to everyone trying to buy stuff before the tariffs hit. And then all of a sudden, we had a big decline, -10. or that's the expectation, we're going to have negative 10. So we'll see what that number ends up looking like, but any real deviation from there, this is just so darn volatile on durable goods orders. I have no clue where I think this one's going to go. It's just going to be very, very, very volatile. Now, on earnings for tomorrow, Friday's usually rather quiet. You can see we got HCA Healthcare, we got Phillips 66, and that is pretty much it. I'll go over this last one here for you, Larry, and then I'm going to wrap things up. I've got ASTS. Says it is in pretty much uncharted territory. Very tough to hold here going into earnings in a couple of weeks. Dipping on the 500 million note offering. I've been holding half since October and the rest since January. I mean, look, I know myself. I'm taking profit. I'm absolutely taking profit on this bad boy. There's no way I'd want to hold this, knowing it's gone from $24 to $60 in 9 sessions. Yeah, no. Especially, if you said you've been holding since October, I mean, that means that you have been in this thing when it was at like $2 and is now at 60. I would take some profit, my friend, because you don't want to give all that back. I would definitely take some profit, and the rest since January. So you're still pretty damn great, but great trade. Got very fortunate with that one, man. That's a great trade. So yeah, I would personally, I'm not a financial advisor. If it was me, I'd take my money and be super proud and happy of what I managed to make. Cool. All right. Well, that's gonna. I think we covered all the major markets. Not really else left to talk about, so I'm gonna wrap it up. Larry says 21.34 average. Good for you, man. You're up 200%. I'd take that money and run. Take that money and run. Okay, for tomorrow, it's trading week wrap up. You know the usual. I will be happily talking about whatever trades you guys want to talk about. If you got things you want to share, want me to talk about something, email me at TraderMerlin@gmail.com. You know the way to do that. And I will be happy to answer whatever questions you guys have on tomorrow's show. Until then, be safe, have a great trade, and I'll see you tomorrow.